Folks, I want to talk about 10 major sectors of the economy, how it impacts the market, how to gauge them, and how to figure out which one's going to lead and which one is going to follow. So I'm going to do a 2 or 3 part video series. Follow along, and if you like what you see, subscribe to our channel. You can subscribe to our channel while you're watching the video, after you watch the video, or before you watch the video. Now, my writing sucks, okay? I could barely read my own writing. That's why we're talking, that's why we're doing this live. So I'm going to explain to you a few things, and then we're going to go from there. So the S&P 500, the biggest 500 stocks in the universe, are divided into 10 major sectors, all right? 10, not 5, not 3. Now, you can argue and say it's 11 sectors because they've recently snuck in this telecommunication one, but honestly, as far as I could tell, it's still technology. So I'm going to stick to my 10 sectors, and I'll just bury my head in the sand for that 11th one. We won't share the secret with anyone. It'll be between us, okay? So let's continue. 10 sectors: industrial, consumer staples, consumer discretionary, real estate, utilities, materials, health, tech, energy, and finance, all right? That's 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 sectors. How do you know which one to trade? How do you know which one to buy? How do you know which one to sell? How do you know which one to avoid? How do you know which stocks are in each one? Let's talk all about it. So, typically, when the stock market is in a bull run, when stocks are rising, okay, you want to focus on the tech sector, the consumer discretionary sector, and that's it right there. Those two sectors, consumer discretionary and tech. Typically, when stocks are bullish, when they're rising, when they're moving, those are the first two sectors to rise, tech and consumer discretionary, and they have a lot of cross-contamination, meaning there's a lot of consumer stocks that are tech stocks, and there's a lot of tech stocks that are consumer stocks, and a lot of them are also retail. But anyway, we got 10 major sectors. So, if stocks are coming off, then you want to go defensive. If you want to go defensive, you got to look at utilities, okay, and healthcare. Those two industries typically rise when the stock market gets defensive, okay? And when you see interest rates rising, that usually means stocks are coming off a little bit, and that's a good time to invest in the energy and the finance sector and the materials. So, typically, if stocks are rising, you want to be in speculative sectors like consumer discretionary or tech. If stocks are falling sharp, you want to be in utilities and energies. And if stocks are in the middle ground, it's probably a good time to be in industrial, consumer staples, basic material, and finance. All right? So that kind of gives you a middle ground. But that's not always how the markets work. Sometimes you want to gauge these because you want to pick stocks in the strongest sectors, and you want to sell stocks or avoid stocks in the weakest sectors. So in this video, I gave you a round picture. I gave you a good forest from the tree look at the 10 major sectors. I explained which ones rise during bull markets, which ones fall during bear markets, and which ones hold steady during congested markets, okay? In the next video, I'm going to give you a very simple technical way to gauge these sectors to determine exactly which ones are leading and which ones are falling behind so you can take advantage of them. And remember, all of these sectors have tradable ETFs. So you don't have to just trade stocks within each sector, you can trade the sector itself, okay? For example, technologies XLK, energies XLE. So you can trade the entire sector. You don't have to choose stocks within that sector if that's what you want to do. Stay tuned for the next video. We're going to get into technical analysis of the 10 major sectors.